Hi, I'm Tracey Cross. I am a legal advisor, an independent director, and I have the pleasure of advising boards and doing training facilitation. So today I'm joined Mark, and the topic is governance and employee financial wellbeing.
Hi, welcome to Governance Bites. My name is Mark Banicevich, and as you just heard today, I get to spend more time with Tracey Cross. Tracey, thank you very much for your time. Love coming to see you, and it's been a little while since we've had a chance to catch up, so this is a great excuse. The topic that you suggested here is around governance and employee financial wellbeing. To start with, how should boards think about financial wellbeing as part of whether they've got a duty of care to employees or part of that responsibility around their employees?
Well, I think employer financial wellbeing is something that hasn't really been talked about. I think even for myself, it's been a consideration more recently as we talk about retirement savings, the lack thereof, the gap with regard to female sort of balances, etc. And we have all these sort of great conversations, but we're sort of more often than not talking to the converted, and we're not actually talking about these really tricky conversations at a high level, at a governance level. So I think that employee financial wellbeing is important for boards and for organisations, because it is your people. It is your people that's servicing your product, distributing your product, helping you build the revenue and the profit that you want. And if we're not looking after our people in the right way, I think that's sort of a real lost opportunity.
Probably fair to say that employees that are not doing, having not got good financial wellbeing, may be stressed at work, and it may roll over and cause underperformance. So there's probably an economic reason to do it if you get the numbers right, as well as being a good social reason to do it, right, to help people. One of the things I remember from some Financial Services Council research, we've heard for a long time around the low level of financial literacy in our country, and reading all this research and seeing this number many times, you kind of think, yes, we've got a financial literacy problem. And the piece of research that the FSC did a couple of years ago that really drew that out for me was where they had 4 questions around financial literacy, and I think 52% of people got 2 or fewer of those right. But it was the colour of the questions that really threw me, and one of them was something along the lines of, if you have a 2% inflation rate and you have $100 in 1 year's time, can you buy more or less of the same as you can buy today? 2 of them were true or false. One was around, is it safer to, I think it was something along the lines of, it is more risky to invest in one company than it is to invest in a large number of companies, around diversification. And the other one was something similar around balance versus aggressive funds. And I can't remember what the 4th question was, but those questions were so fundamentally straightforward. There was no mathematical calculation in them.
Well, you think that they're fundamentally straightforward?
Yeah, exactly. And without having any mathematical calculations, it's concepts that people generally are battling with. So this area is certainly somewhere that companies can add real value to their employees. Do you see this financial wellbeing as a governance issue or an HR issue, or is it both?
Look, I think it's both. I mean, it's dealing with people. Of course, HR is always going to come into the equation. But I think, picking up my earlier point, we've got to have these conversations at a high level. If we're talking about our people stressing about their finances, and as FSC's done research around this, their resilience index tracker, etc. And I think 70% of Kiwis were sort of stressed about money. Might be changing sort of slowly now, but there is a sort of a real baseline of real concern there. And I think the 2025 Wellness Workplace Report said, I'm just got my figure here, 79% of non-related stress was related to financial concerns. So if our people are worried about their finances and they're bringing that worry to work, they're not going to be productive because they are worried about it. And I think that High Money has issued a great report, rich in context, around just how we deal with our money, how we think about our money, how our upbringing impacts our consideration and willingness to learn or talk about money, sort of picking up your point around the questions also. we really need to provide our employees with support in this respect, and then they will be more productive and give back more to the company. I think the other aspect too, though, is that, you know, if we're not including that as part of our, you know, overall wellbeing focus within organisations, someone else will be. And as we know, with younger generations, it's not all about the money, is it? It's about, you know, being seen, the employer being seen to care. Yeah, exactly. So they'll likely jump ship.
Right. So you just raised there one risk that boards will face if they fail to have financial well-being somewhere in their governance frameworks around the business. What other risks are there for the...
Well, I think you've got the attraction and the retention of people that sort of impacts that. But just picking up more importantly for a lot of people, it's around the productivity. I mean, if this is impacting our bottom line, surely it's important to pick it up. But having said that, we know that D&I supports the bottom line, but we have entities that aren't really picking up on that or are sort of pausing it.
Yeah, as within an entity, it would be quite hard to measure as well, wouldn't it? That you know, because you're looking at a snapshot now, and unless you take some approach, some intervention, and then measure before and after, you've got no data. So you're relying either on external research, which, as you say, is very clear, but how many small business owners are there that are out there looking at this research and saying, I really should be doing this stuff? So a business that may have a level of productivity, wherever it may be, may not understand, may not know what the opportunities are to improve that productivity. And someone may come in and say, look, if you help your staff understand money better, you'll perform better. You know, you might get a bit of a sideways glance at.
Well, that's right. And if we have more of these conversations around it, so that everyone can, you know, pick up on them, and your podcasts are very available, Mark, you know, so that they sort of hear and it just triggers something and they think, oh, okay.
Make it
well, you know, I might not be able to sort of delve into my company, but who could support me with that? I mean, there's some great people and tools out there these days.
Absolutely there are, What signals should directors look for to indicate that employee financial stress is undermining their productivity or their culture or the retention in the business?
Well, I think absenteeism is always a good indicator of something, you know, going on, together with you know, cultural surveys, things like that, you know, just actually management talking to the people, seeing what's going on, seeing what, you know, is important to them. It was interesting at the IOD conference this year, and they had the Edelman Trust Barometer, you know, that they do, sort of, I'm not quite sure if it's been a couple of years, and they were sort of talking about how, you know, in this crazy world of polarisation and misinformation and, you know, there's sort of a real sort of lack of trust, that workplaces are seen as a bit of a safe space for people, and employees really expect or want their workplaces to step up, to lead, to, I think they talked about workplaces being the island of civility. So, you know, if you've got people really in this crazy world thinking, well, where do I go? You know, who do you believe? You know, if they're looking at for the workplace, it's an opportunity for employers to sort of step up and support and really lead the space. And, you know, the benefits will come, won't they, with regard to the attraction and retention. You know, you've got the good people, you've sort of educated them, you've empowered them to, you know, be better equipped to deal with their finances, to be more financial resilience. You're going to get more productivity out of them and a better, you know, better bottom line. And
it's interesting with KiwiSaver, we've got the perfect opportunity to do so, right? And it was set up with this idea that employers would step in and help drive that conversation, but that hasn't really happened so far. It's been more the KiwiSaver providers themselves directly marketing to individuals rather than companies choosing preferred
and, you know,
providers.
that's a lost opportunity too, isn't it? Because, you know, you do have some amazing employers that are really contributing to KiwiSaver and have been proactively for, you know, for many years. So again, it's an opportunity for employers that really want to make a difference and to differentiate themselves, as is looking at your parental leave policy or your gender pay gap or, you know, these sorts of things. You know, how are you actually supporting, you know, your team of employees, and how can you, what are the opportunities to sort of market and tell your story to others? Because everyone, you know, it's the power of storytelling. You know, that's what people want to engage with. And I think that's really important when people are looking for roles.
Yes. It's interesting what you were saying before about the Edelman survey and about people wanting this kind of help, because quite often people see finance as something that if you step in and ask a question about this, the answer could be quite defensive about what business is that of yours. So it can be a very difficult subject to approach. So it is something that businesses would have to tackle very carefully, but the value in doing so is really high.
And I think too, there is sort of a bit of a reluctance to talk about finances in the workplace, or am I giving advice, or things like that. So employers have just sort of steered right away. But it's getting the right sort of support and the right tools. I mean, one of the things that's a bit of a promo, but for the FSC Empower Women, we're looking at a potential creation of a toolkit for employers, where we can bring in all of these great resources that are out there now, whether it be around the parental leave policy or Ministry for Women's Gender Pay Gap reporting toolkit, where we can bring all of these things together so that employers can use them, employees can access them a lot easier, in the hope, and it's in partnership with the Retirement Commission, in the hope that we can actually elevate the financial resilience and empowerment of New Zealanders.
I was going to say that because the Retirement Commission has sorted at work as well as a program as well, don't they? So as you say, there's some really great programs out there.
But there's so much out there, but people don't know where they are, and also it's an opportunity, that sort of toolkit, and there may not be appetite, it may not go anywhere, but we're sort of testing it at the moment. But it could really make a difference.
It can. Yeah, I mentioned before around how for an individual business it can be quite hard to know what is the current state and what is the impact in terms of productivity gain around making these changes around financial wellbeing for the employees. How might boards measure the return on investment?
Well, I think you've got to have very clear measurements right from the start. Now, that's not necessarily answering your question as to what are those measures, but I think that the measures need to be relevant. They need to actually be objectively sort of tested. And I think it's just sort of setting that sort of benchmark. Where are we now? So what's our, we might not have any data about how are people feeling about their financial wellbeing or what have you, but if we start including it in our staff survey, for example, testing the waters, asking our people what they need, etc., what are their stress points, appropriately, of course, that's going to be your starting point. Your starting point won't necessarily be perfect, but you're starting. Otherwise, we just talk about this or we don't do anything.
And it would also be interesting to measure your standard productivity measures, depending on whether you're producing goods or services, all the standard production per hour, whatever that may be, and how much is that improving? And you wouldn't expect it to double, but you might get 5% increments or those sorts of things.
And your staff retention, you would think would be, the survey results, your staff retention. Are we keeping people? Are we attracting people? Attracting quality people? Are they leaving? Sort of the big competitor that's being, really leading in the space. Those sorts of things.
Yeah, and you'd expect that if you're retaining staff, you're not training up new staff. That would lead to higher productivity.
Yeah.
Okay, right. What metrics or reporting should boards request from management around employee financial wellbeing?
Well, I think it sort of comes back to that earlier point, really, and sort of actually identifying what we want to know, and what we're doing. So I think we've sort of got to come back to what do our employees need or want, because there's no point doing something if it's not wanted. And we know that the assistance programs, a lot of the work that goes on there is around financial well-being and stresses, etc. Now we don't know the detail of all of that because, of course, it's confidential. But you could have some discussion groups.
A lot of that's too little, too late, too, right? Because those employee programs are when something's broken and the employee reaches out for help, and I think quite often you get 3 sessions. That's not going to turn the world around.
But I think even just simple things that, if you're offering some sort of financial course or education piece or webinars or offering a deal on insurance or whatever, it's sort of the uptake. Exactly. So how many, have we got attendance? Is our attendance increasing? What are our people talking about? Is there a real buzz around the room because, oh my goodness, they're finally getting the support where they can sort of talk about things sort of openly and with the right sort of experts being brought in to sort of support them. So I think it's what does it feel like as well? There'll be better experts than me that can sort of work out sort of the measures, etc. But I think you've just got to start and have the conversation.
As a director, you can start by saying, as you say, what initiatives are in place, how many people have been through those initiatives, and then your staff surveys and things to find out the impact.
And the starting point too is, well, what does our employee wellbeing program look like? Does it even include, financial wellbeing? Chances are it won't. And I mean, I am aware of some that have really sort of brought it in, and it's been just really well received, particularly in times when people are clearly stressed.
Yes, absolutely. And as much as we're not talking as much now about the cost of living crisis. Costs haven't gone down.
No.
Salaries haven't gone up enough to compensate for the jump that we had in the last sort of 2 years. So it's still there. The struggle's
that's right. And there's a tail on these things, isn't it? It doesn't mean that the economy sort of starts to go up and everyone's sort of problems are resolved.
No.
And I think, coming back to that earlier point about employers actually looking at what they're doing and how that might impact, their employees' financial wellbeing is quite important.
Yeah, very much. How can boards balance the cost of these programs with the shareholders' expectation for returns in the business?
It's just like anything, isn't it, Mark? I mean, there's costs and benefits, and it's what's important. It's what's going to drive that return to the shareholders, which this is just a small component. So I just see it as any other sort of topic.
Yeah, right. I guess to a large extent as well, the costs would be pretty insignificant too, wouldn't they, for most businesses? That would just come out of an HR budget for a large business, and for a smaller business, there's probably a lot of services, your Good Shepherds and things where you might be able to get some assistance, low or no cost.
I think though that, because it's sort of low cost and let's say HR's there to support, etc., we just need to be careful that we just don't keep the topic down here. I think that it should be a topic that the board is leading as part of the overall sort of wellbeing strategy for sort of the organisation. I mean, obviously management's doing all the doing and coming up with sort of the ideas and the most appropriate ways to do things, but I think the board should be asking the questions.
Yeah, absolutely. What examples have you seen where strong board leadership made a measurable difference to wellbeing, financial wellbeing?
Well, I think it just comes back to sort of really asking curious questions and being interested in what the business is doing and diving down into that level. So we've got a wellbeing program that's great, but does it include financial wellbeing? As compared to, yes, we've got a wellbeing program, tick, and now let's move on to something more important. I think it's really sort of leading that sort of conversation, which often isn't had at the board.
One final question for you off the topic a little bit. What advice would you give to a new director?
I think there's a lot of support that's available out there. You don't have to do it on your own. There's a lot of great sort of networks, and I think it's important just to reach out for support, including around the board table. It can be quite intimidating when you go onto a board and there's very experienced, board members there and you're just sort of a newbie. But just reach out because everyone's really willing to sort of help and support.
Cool. Ask for help, look around, it's there.
Yeah, absolutely.
Great. Tracey, thank you so much. It's been a cool conversation. I'll look forward to catching up again soon.
Cheers, thanks, Mark.
And seeing you next episode. Thank you for watching this episode of Governance Bites. We have more episodes on YouTube and your favourite podcast channel, where I interview directors and experts on various topics relating to boards of directors and governance. We'd love to see you back, and please like, subscribe, and share the videos and podcasts.